Peace be upon you. Is it possible that the rich don't pay taxes? Can big companies use taxes to their advantage and the tax burden falls on ordinary people? Welcome to the fourth lesson by Robert Kiyosaki on the history of taxes and their relationship with companies. I'm your brother Salah. I read a book and explained it to you. So, if you are one of those people who don't like reading books or don't have time to read books, join us by subscribing. Let's get started. Robert Kiyosaki told the story of a man named Robin Hood who used to steal from the rich and give to the poor. Robert Kiyosaki often heard poor people saying that the rich should pay high taxes to solve the problems of the poor and increase their income. The rich dad never agreed with this opinion and even described Robin Hood as a fraud. Robert explained that the reality is that the higher the taxes on the rich, the more the middle class bears a larger burden of the tax. How does that work? Let me explain. Robert says that there was no such thing as income tax in America and England in the 1880s, but there were temporary fees paid during wars as aid to the state. In 1874, the tax was officially applied to companies in England. After that, there were demonstrations by Americans to apply the tax on the rich in America. At that time, the tax became an acceptable matter for the majority. Although it initially punished the rich for their significant control over the state's money, it was later applied to all citizens, whether poor or not. This, of course, negatively affected the poor and the middle class because they bore the largest burden of the imposed income tax. They were the ones who voted and demonstrated to take the tax from the rich, and over time, it backfired on them, and the tax was applied to everyone. But the person who is well-versed in financial intelligence is always the one who can find a solution to his financial problems, just like the rich did, and we will learn about that now. Imagine a merchant sold a house for $1 million. They may pay a 35% tax, meaning $350,000 of the million they received would go to the state. That's why the rich have solutions to reduce their tax burden. Robert Kiyosaki advises you to look at the legal provisions in your country and try to benefit from them fully. He gave an example in the American Tax Code. According to Section 10.31 of the American Tax Code, the seller is tax exempt if they trade the asset for a pricier one. What does this imply? It means if a person sells a house and deposits the money, they have a short period to pay the tax on that amount, which can be between 30% to 35% of the sale value. However, if the seller sells a property and buys or trades for a pricier one within the allowed period, they are exempt from the tax imposed according to Section 10.31. This is because the tax is on the income from the money. If they operate this way for 10 years, they are exempt from income tax. But if they convert the asset to liquid cash and keep it, income tax will be imposed on them. The rich don't keep their money in cash, they convert it to assets. Thus, the poor and the middle class bear the highest taxes as taxes are deducted from their salaries before receiving them. They have to live on what remains of their salary to support their families. The ladder of job promotions and salary increases is now additional tax traps, with middle-income employees being the first to fall into them. Robert Kiyosaki says, "When I was in my mid-20s, I left my job in the US Navy and got a job at a company called Xerox. Although my salary was high, I was always frustrated when I received my paycheck because of the amount of tax that was deducted, which amounted to a third of my salary going to the government. The more effort I put in to earn additional income and increase my salary, the more additional taxes I faced. After 2 years, in 1974, I started my first company in real estate. My business was small, and my assets were very limited, but I focused on it and continued to develop it alongside my job. After 4 years, I was among the top 5 people in the sales department at my job, and my salary had increased significantly. However, I sacrificed the job to focus on my real estate business, which eventually brought in more income than my job at Xerox. One of the advantages I gained from my company was that I could choose when to pay taxes on its income and determine the total amount I wanted to pay. I would cover my obligations and expenses from the income and grow my assets by converting them from one asset to another without liquid cash. The remaining cash would be used to pay taxes. On the other hand, an employee receives their salary in exchange for their work and pays taxes first, then lives on what is left. He also mentioned that one of the advantages for companies is protection from legal lawsuits, because we live in a society that always leans towards litigation and courts. This has led the rich to hide all their wealth in the form of assets like companies and others to protect their assets from creditors. When anyone files a lawsuit against the rich, they face many legal procedures, and in the end, it turns out that the rich person does not own anything directly, but in the form of assets and companies. This does not mean that the rich manage everything and own nothing, while the poor and middle class own everything and lose it to the government in the form of taxes. My rich dad said that when the government got a taste of money, its appetite grew, and that's why it imposed taxes on everyone, rich and poor. He told me that my father and I are two contradictory people in thinking and work. He works for the government, earning his salary for his work, while I am a capitalist. He takes the money, spends it, or employs people in the government. The more employees in the public sector, the larger his institution grows, and his spending increases, leading the government to need more money. So, it imposes taxes on citizens, employees, and low-income classes. However, the rich found it an opportunity to play in different ways to protect their wealth from the government's greed and legally reduce or evade taxes. Those who own a company have a way to avoid taxes because a company is just a file containing a set of legal documents that lawyers use as a weapon to protect the company owners. The income tax rate for companies is lower than the income tax rate for ordinary individuals. Additionally, company owners control their wealth and choose what to do with it and how much tax to pay, and even when to pay it. Can you imagine that there are very wealthy individuals who do not pay taxes to the state? For example, Donald Trump does not pay taxes, Jeff Bezos, the owner of Amazon, does not pay taxes, and Robert Kiyosaki does not pay taxes. If the middle class knew the way the game is played, they could escape bearing the greatest tax burden. Robert Kiyosaki said that the middle class bears the greatest tax burden and is the biggest loser because their financial literacy is very weak. He said that the average person works 5 or 6 months just to cover a year's worth of taxes for the government, and the rest of the year's income is for their living expenses and their families. Imagine, half a year goes to taxes and the other half is for your living expenses and family needs. Robert says this made him remember the phrase, "take from the rich," and how this phrase negatively affected everyone, especially those who voted for the law to impose taxes on the rich. He said that what we learned from financial intelligence is not to let business owners exploit us for their interests. It is important for anyone to understand the tax system of the country they live in. Be smart so no one can control you and force you to pay high taxes. That's it, and I hope I have been helpful. If you liked what we provided today, please subscribe to our channel to get the benefit of reading without reading. We would be very happy to have you follow us. Don't forget to give us a like if you enjoyed the video, and stay tuned for the next chapter. Peace be upon you.